Where are you on your trading journey? Trading is a journey. It is not a short race. To understand where you are, you must pause, reflect on your progress, and honestly recognize who you are at this moment. You must resist the temptation to keep charging blindly into the market without clarity. If you do not know your current position, you will never know where you should go next. Throughout the process of becoming a trader, everyone passes through different stages of psychology and skill. Recognizing the stage you are in will help you avoid unrealistic expectations. It will help you stop comparing yourself to others. It will help you focus on what truly matters for your own development. Below are 5 common stages that almost every trader will experience on this path. The dreaming stage, I think I know. At this earliest stage of trading, you are not truly trading. You are chasing an illusion. You have been lured in by the glamorous promises of the financial markets, the vision of freedom, the potential for fast money, and the dream of sitting in front of a laptop making thousands of dollars in a day have clouded your judgment. You believe that trading offers an escape from the ordinary life. The charts look easy. The strategies seem simple. You tell yourself that you just need to study harder, try longer, and eventually success will be yours. It often starts innocently. You come across a story online about someone who turned a small account into a fortune. Maybe you watched a video on social media where a trader flaunts luxury cars, vacations, and profits with little explanation of the pain behind the scenes. You read a few books that promise to reveal the secrets of the markets. You take a few online courses or buy a cheap trading system. These things give you a false sense of progress. You start believing that knowledge alone is enough. You think that discipline is something that will come naturally once you understand how the market works. At this point, you are dangerously overconfident without realizing it. You tell yourself, I understand technical analysis. I know how to read candlesticks. I can follow trends. I know how to manage risk. But these are only surface level understandings. In truth, you have not yet been tested by the market. You have not experienced the reality of losing streaks, of false breakouts, of sudden reversals that wipe out your confidence. What you do not yet understand is that the market operates on probability, not certainty. You do not know how the crowd thinks, how psychology drives price far beyond logic, and how the game is built to exploit your emotions. You are still playing checkers on a chessboard. Signs you are in this stage. One of the clearest signs that you are stuck in this dreaming stage is that you are constantly searching for the next perfect method. You jump from strategy to strategy. One week you believe moving averages hold the answer. The next week you chase breakout systems. You buy indicators because someone on the internet made them look magical. You subscribe to trading groups, hoping to find secret setups. You follow signal providers without understanding their logic. You believe that somewhere out there, someone has already figured it all out. You think you only need to copy their blueprint and success will follow. But this is the trap. There is no universal solution. There is no holy grail. There is only finding what works for you and having the patience to master it over time. Your trading results are inconsistent. Sometimes you catch a lucky trend and your account grows quickly. Other times you lose even faster. But you justify it all by telling yourself, I just need to tweak the system. I just need to find the right market condition. You believe that more knowledge will fix the problem, not realizing that your real obstacle is within yourself. The psychology of this stage. Emotionally, this stage is dangerous because it feeds on hope and imagination rather than reality. You feel excited by the possibilities. You fantasize about quitting your job, about financial independence, about living life on your own terms. You start calculating how much you could earn per week, per month, per year, if only you could be a little more consistent. But this excitement blinds you. You underestimate the difficulty. You ignore warnings from more experienced traders who tell you that most people fail. You think you will be different because you are more determined, more willing to work hard. What you do not yet understand is that the market does not care about your effort. The market only rewards those who think correctly, manage risk appropriately, and act with discipline over time. You also begin to confuse activity with progress. You spend countless hours watching charts, testing indicators, reading news, but you are not building a structured process. You are not tracking your performance properly. You are not reflecting on your mistakes. You are not learning patience or emotional control. In other words, you are busy, but you are not becoming a trader. The hidden cost of this stage. The cost of staying in this stage too long is high. It is not just about losing money, though that certainly happens. It is about forming bad habits that become hard to break later. It is about feeding illusions that will eventually shatter in painful ways. It is about wasting months or years thinking you are improving when in fact you are running in circles. You may also begin to develop a toxic relationship with trading. You chase losses, increase your position size recklessly, break your own rules, and blame the market for your failures. You may experience moments of self-doubt, frustration, even anger. Yet you refuse to step back and ask yourself the hard questions. You keep moving forward blindly, convinced that success is just around the corner. How to move beyond this stage? The only way to grow past this phase is through painful honesty. You must admit to yourself that you do not know as much as you think. You must recognize that your current actions are driven by emotion, not logic. You must stop chasing strategies and start building a solid foundation. This means learning to think in probabilities, not predictions. It means studying risk management deeply, not just as a concept, but as a daily practice. It means understanding that psychology is more important than any indicator or tool. It means accepting that consistency comes from boring repetition, not exciting breakthroughs. You must also begin to measure your progress differently. Not by profits, not by how many strategies you have tested, but by how well you can follow a plan, by how calmly you can take a loss, by how disciplined you can remain through uncertainty. This is not a quick fix. It takes time. It takes failure. It takes resilience. But if you can accept this truth, you will finally be ready to leave behind the dream and step into the reality of trading as a business. Final thought. Every experienced trader has been through this stage. It is a rite of passage. The difference between those who succeed and those who fail is simple. The successful ones recognize their own ignorance and choose to grow. The others stay stuck, forever searching for answers outside themselves. Ask yourself honestly, are you still dreaming? Or are you ready to wake up and trade like a professional? The confusion stage. Why am I still losing? This is one of the most painful and frustrating phases in a trader's journey. You have invested time, money, and effort. You have read books, attended courses, followed mentors, and absorbed knowledge from every possible source. On the surface, you should be ready. You understand technical analysis. You know about indicators, support and resistance, risk-to-reward ratios. You are familiar with trading platforms. You have even started to develop a routine. But despite all of this, your results remain disappointing. You are losing more often than you expected. Your account is shrinking when you thought it would grow. You feel confused, frustrated, and increasingly doubtful. You start asking yourself questions that cut deep. Why is this not working? Why do others seem to win so easily while I struggle just to stay afloat? Am I not smart enough? Is there something wrong with me? Or worse, am I simply not suited for trading at all? The emotional trap of this stage. This stage is dangerous not because of financial losses alone, but because of the mental toll it takes on you. Confusion leads to frustration. Frustration breeds self-doubt. You start questioning everything you thought you knew. You question your strategies, your knowledge, your discipline. You question whether trading is even real or just a giant scam designed to take your money. The hardest part is watching others appear to succeed. Social media is full of people showing off wins, flashing profits, sharing screenshots of green days and perfect trades. You wonder why it seems so easy for them while you continue to bleed money despite your best efforts. This comparison eats away at your confidence. At this stage, many traders oscillate between two extremes. One moment, you convince yourself you simply need to push harder, study more, change strategies again. The next moment, you feel burned out, tempted to quit, believing trading may not be for you after all. This internal back and forth drains your energy and clouds your judgment. Signs you are in this stage. There are clear patterns that reveal you are stuck in this confusion phase. You start overanalyzing every loss. You second guess your setups. You rewrite your trading plan repeatedly, trying to fix what you believe is broken. You jump between systems, thinking the problem lies in the strategy rather than in its execution. You blame market conditions. You blame bad luck. Sometimes you even blame yourself in harsh, unforgiving ways. You might also begin to study areas you previously ignored: risk management, trading psychology, money management. You realize, perhaps for the first time, that trading is not just about finding the right entry or exit. It is about controlling your emotions, preserving capital, and understanding the deeper forces at play within the markets and within yourself. But despite these realizations, you struggle to put theory into practice. Knowing is one thing, doing is another. And in this stage, your actions remain inconsistent. You break your rules when under pressure. You hesitate to take trades even when your system signals you should. You cut winners too early out of fear and let losers run out of stubbornness. The root cause of this stage. The core issue here is not knowledge. By this point, you know plenty. The problem lies in your mindset and expectations. You came into trading believing that knowledge alone would equal results. But trading is not a field where more information automatically leads to success. It is a business of probabilities, uncertainty, and managing both risk and yourself under pressure. You have not yet accepted this truth at a deep level. You still secretly hope to find a method that works most of the time, that minimizes losses, that makes the journey feel comfortable. But no such method exists. Every strategy, no matter how robust, will face losing streaks. Every trader, no matter how experienced, must endure drawdowns. The sooner you accept this reality, the sooner you can move forward. Why so many quit here? This phase breaks people because it exposes the gap between expectation and reality. You expected progress to look like a straight line upwards. Instead, it feels like one step forward, two steps back. You wanted confirmation that you belong in this world of trading. Instead, you feel lost and uncertain. Many traders quit at this stage. They walk away believing trading is not for them. In truth, they simply did not understand what was required. This stage is not a sign you should quit. It is a sign you are being tested. Your mindset, patience, and emotional resilience are being forged here. Those who survive this stage do so not because they are smarter, but because they learn to think differently. They stop searching for easy answers. They stop comparing themselves to others. They start focusing inward on their own process, their own behavior, their own emotional responses. How to move beyond this stage? The first step is to reframe your expectations. Trading is not about winning every day or even every week. It is about managing risk, surviving volatility, and achieving consistency over long periods. Small, steady progress beats explosive short-term gains. You must also simplify. Strip your trading system down to its core. One setup, one time frame, one market if necessary. Stop chasing complexity. Focus on mastering execution, following your rules flawlessly, managing risk with precision. Build confidence through consistency, not through chasing profits. Track your trades meticulously. Keep a journal not just of entries and exits, but of your thoughts, emotions, and decision-making process. Review this journal regularly to identify patterns of behavior that sabotage your success. Study trading psychology seriously. Understand how fear, greed, hope, and regret influence your decisions. Learn about cognitive biases that distort perception. Train your mind to think in probabilities rather than certainties. Most importantly, give yourself time. Mastery does not happen overnight. Accept that setbacks are part of the journey. Learn from them rather than letting them define you. Final thought. Every successful trader has passed through this stage of confusion and doubt. It is a necessary part of the learning curve. The difference between those who make it and those who do not is mindset. The winners embrace the struggle, use it to grow, and keep moving forward with patience and discipline. Ask yourself honestly, are you stuck in confusion because you lack knowledge or because you have not yet mastered yourself? The answer will determine whether you quit here or advance to the next stage, the awareness stage. The market is not wrong, I am wrong. This is the stage where many traders experience a profound shift in perspective. After countless hours of study, after numerous strategies tested and discarded, after the painful losses and moments of self doubt, something finally clicks. You come to realize that trading is not easy money. It is not a game designed to satisfy your emotional needs. It is not about being right all the time. It is about survival, probabilities, and understanding yourself in a way you never have before. This awareness does not come suddenly. It creeps in slowly, often after frustration has broken down your ego and humbled your expectations. You begin to understand that losses are not signs of failure, but simply part of the process. You no longer seek the perfect strategy. You no longer believe in the fantasy of 100% win rates. Instead, you accept that even the best system will produce losses and that your job is to manage them, not to avoid them. You understand that your biggest enemy was never the market. It was your lack of discipline, your impatience, your emotional reactions, and your unrealistic expectations. The market does not care about your feelings, your needs, or your desires. It operates on probabilities, not guarantees. It is neither fair nor unfair. It simply is. The psychological shift of this stage. This is the moment you begin to trade like a professional. You stop asking, how do I avoid losses, and start asking, how do I manage losses? You understand that risk management and discipline are more important than predicting the market. You shift your focus from outcomes to process. Winning or losing a single trade no longer defines your confidence. What matters now is whether you followed your plan. You also recognize the limitations of your knowledge. You accept that no one can predict the future. You let go of the need to control the market and instead focus on controlling yourself. This shift in thinking reduces the emotional roller coaster that plagued you in earlier stages. You no longer panic after a loss or get overconfident after a win. Your mindset becomes more stable, more grounded in reality. Signs you are in this stage. There are clear behaviors that indicate you have entered this awareness stage. You stop jumping from system to system. You recognize that consistency comes from within, not from external tools. You begin to build a trading system that fits your personality, your time commitment, and your tolerance for risk. You are no longer looking for someone else's blueprint. You are creating your own. You start keeping a detailed trading journal, not just to record wins and losses, but to analyze your decisions, your emotions, and your adherence to your rules. You understand that self-awareness is a critical skill for any trader. Your journal becomes a mirror, reflecting both your progress and your weaknesses. You accept stop-loss orders as part of the business. You no longer fear taking a loss because you know it is controlled, calculated, and necessary. Each stop-loss is just a small cost of doing business, not a personal failure. You focus on the bigger picture, on the long-term curve of your equity, not the short-term fluctuations. You also become more selective. You no longer feel the urge to trade every day or to chase every opportunity. You understand that patience is a competitive advantage. You wait for high probability setups, for conditions that align with your system. You have learned that sitting on your hands is sometimes the most profitable action. The importance of risk management. Risk management becomes your foundation. You think in terms of risk to reward ratios, drawdowns, and statistical edges. You no longer risk too much on any single trade. You understand that survival is the first priority. You size your positions appropriately, knowing that preserving capital is more important than maximizing gains. You begin to embrace the concept of expectancy. You know that your edge is defined not by how often you win, but by how much you win when you are right versus how much you lose when you are wrong. You see trading as a long series of outcomes where consistency in execution matters far more than any individual result. Why this stage matters. This stage separates those who might eventually succeed from those who will remain stuck or quit altogether. Without this awareness, you will continue to chase illusions, repeat mistakes, and let emotions control your actions. With this awareness, you build the mental framework necessary to endure the inevitable ups and downs of the market. You stop blaming the market. You stop blaming news events, indicators, or other traders. You take full responsibility for your results. This ownership is liberating. It puts you back in control, not of the market, but of your process and your actions. Challenges that remain. Even at this stage, challenges persist. You will still face losing streaks that test your patience. You will still experience moments of doubt, but now you handle these with greater resilience. You no longer see them as threats to your identity, but as expected parts of the business. You understand that growth is ongoing. There is no arrival point, no moment where you have finally made it. The markets evolve, and so must you. This humility keeps you learning, keeps you refining, keeps you grounded. How to progress beyond this stage? To move forward, you must continue to refine your system, not in search of perfection, but in pursuit of consistency. You must deepen your understanding of yourself as much as the market. Review your journal regularly. Analyze not just your trades, but your thought processes. Identify emotional triggers and develop strategies to manage them. Surround yourself with traders who share this mindset. Avoid those still chasing shortcuts or bragging about easy wins. Seek communities that value discipline, process, and professionalism. Invest in your mental game. Read about psychology, cognitive biases, and decision-making under uncertainty. Understand that mastery is not about eliminating emotions, but learning to trade despite them. Final thought. This awareness stage is where trading stops being a fantasy and becomes a business. You understand the rules of the game. You respect them. You work within them. You trade with patience, discipline, and humility. You have stopped looking for easy answers because you know none exist. Ask yourself honestly, have you accepted that the market is never wrong, only your reactions to it can be? Have you taken ownership of your journey? The answer will determine whether you are ready to advance to the next stage where consistency and professionalism begin to emerge. The maturity stage. I need discipline, not prediction. This is the stage where trading finally sheds its illusions. The excitement of the early days fades. The confusion of the middle stages dissolves. What remains is clarity. You no longer seek to outsmart the market. You no longer chase the next hot method or indicator. You understand with absolute conviction that your success does not depend on predicting the market's next move. It depends on your ability to follow your plan with unwavering discipline. At this stage, you stop searching for certainty. You fully embrace the reality that markets are built on probabilities, not guarantees. Your focus shifts from outcomes to process. You understand that your edge, however small, can only yield results if applied consistently over a large enough sample size. You stop asking yourself, will this trade win? Instead, you ask, did I execute this trade according to my rules? You recognize that the market is random in the short term. You cannot control outcomes. You can only control yourself. The mindset of discipline. Discipline is no longer a concept to you. It is a daily practice. It is how you trade, how you think, how you manage yourself. You no longer measure your success by a single trade or even a single month. You understand the long game. You think in years, not days. Your focus is on process, on execution, on consistency. You no longer trade because you feel like it. You trade because your system says conditions are right. You no longer take revenge trades. You no longer chase losses. You no longer let a streak of wins lure you into overconfidence. You follow your rules because you understand that your rules are what protect you from yourself. You treat trading like a business. You operate within defined parameters. You know your maximum risk per trade, your maximum daily or weekly loss, your drawdown limits. You have clearly written plans for every aspect of your trading operation. Your system is not something you invent on the fly. It is something you have tested, refined, and proven through data and experience. Signs you are in this stage. Your trading is boring. This is a good thing. You no longer seek excitement from the markets. You seek consistency, stability, and steady performance. Your emotions are steady because your expectations are realistic. You understand that there will be losing streaks, drawdowns, and periods of underperformance. These no longer shake your confidence because you trust your process. You trade fewer setups, but with greater focus. You no longer need to be in the market every day. You are content to wait for your edge. You understand that patience is part of your strategy. You avoid the noise, ignore opinions, and trust your data. You track everything: your trades, your mistakes, your emotions. Your journal is a tool for growth, not punishment. You review it regularly, looking for patterns, weaknesses, and opportunities to improve. You understand that mastery is a process of constant refinement. You no longer need to prove anything to anyone. You are not concerned with sharing screenshots of wins or debating strategies in forums. You understand that trading is a personal journey. Your results speak for themselves, and you have nothing to prove to anyone else. The shift from prediction to probabilities. You fully embrace the reality that you cannot predict the future. No one can. You have stopped trying. Your job is not to predict, but to manage risk and execute your edge. You trade setups that offer favorable probabilities, knowing that any single trade is meaningless. Over hundreds of trades, your edge will show itself. You think in terms of risk to reward, not right or wrong. You understand that your job is to take small, controlled losses and allow your winners to pay for those losses and more. You manage your positions according to predefined rules. You do not let fear or greed dictate your actions. Your mindset is rooted in acceptance. You accept losses without frustration. You accept wins without euphoria. You understand that both are part of the game. Your focus is on execution, not results. Results follow good execution over time. How discipline protects you. Discipline protects your capital. It keeps you from compounding losses through emotional decisions. It keeps you from overtrading in periods of boredom or frustration. It keeps you grounded when markets behave irrationally. It ensures that you survive long enough for your edge to pay off. You understand that the markets are not always favorable to your strategy. You have the discipline to step aside when conditions do not align with your edge. You respect your plan because you respect the risks involved in trading. You have learned that discipline is freedom. It frees you from the chaos of random decisions. It frees you from the emotional highs and lows that destroy so many traders. It gives you confidence, not because you know what will happen next, but because you know how you will respond. The long-term perspective. You no longer think about the next trade. You think about the next 1,000 trades. You no longer chase fast money. You pursue steady, sustainable growth. You understand that wealth in trading is built through compounding over years, not through sudden windfalls. You set realistic goals based on performance metrics, not fantasies. You track your progress through key metrics like expectancy, drawdowns, win rates, and average risk to reward. You review your business like any professional would review a company's performance. You understand that success is not linear. There will be setbacks. There will be plateaus. You embrace these as part of the journey. You adjust, adapt, and continue forward. Final thought. At this stage, you understand that discipline is the foundation of all success in trading. Prediction will fail you. Discipline will protect you. Your growth is no longer about finding new strategies. It is about mastering your execution, your mindset, and your process. Ask yourself honestly, have you stopped trying to predict the market and started focusing on mastering your discipline? The answer will determine whether you are trading as a professional or still chasing illusions. I am a risk manager. Very few traders ever reach this stage. This is not where beginners arrive by luck or by accident. This is not a place where dreams, hope, or emotions survive for long. This is where the game becomes business, where decisions are made with cold clarity, and where discipline is no longer something you aspire to, but something you live by each day. At this stage, you no longer call yourself simply a trader. You see yourself as a professional risk manager. You understand deeply that your job is not to predict markets, not to find magic strategies, not to chase excitement. Your job is to manage risk, preserve capital, execute your edge consistently, and grow your business over time. You know yourself. You know your strengths and weaknesses, both in your strategy and in your psychology. You know how markets move, how volatility behaves, and how your method interacts with different environments. You understand your capital intimately, how to protect it, how to scale it, and how to allocate it across opportunities. You no longer rely on hope or luck. You rely on systems, data, and discipline. The mindset of a professional. Your entire mindset revolves around probabilities, not certainties. You do not judge yourself by a single trade or even by a single week or month. You think in terms of series, of large samples, of statistical edges playing out over time. You understand that losing is part of the business, that drawdowns are unavoidable, and that survival through adversity is what keeps you in the game long enough for your edge to produce results. You control your emotions because you have accepted their existence. You do not fight fear, greed, or doubt by trying to eliminate them. You manage them through routines, processes, and discipline. You understand that consistency in behavior leads to consistency in results. You measure everything. You track performance meticulously. Win rates, average risk to reward, drawdowns, maximum consecutive losses, expectancy. These are your tools. You analyze your performance with the same scrutiny that a successful company examines its financial statements. You do not guess whether you are improving. You know because the numbers tell you. You operate with a business plan. You treat trading as a serious enterprise, not as a hobby or a side hustle. You have clear objectives, defined processes, and contingency plans. You understand capacity, liquidity, scaling, and the impact of growth on your methods. You think long-term, planning quarters and years ahead rather than days or weeks. Signs you are in this stage. There are clear markers that you have reached this level of professionalism. Your profits are steady, not explosive. Your account grows gradually, protected by solid risk management rather than fueled by reckless bets. You understand when to push and when to pull back. You know when market conditions favor your strategies and when it is better to stand aside. You take breaks deliberately. You step away from the screens to maintain clarity. You know that burnout leads to mistakes and that mental capital is as important as financial capital. You have learned that rest is part of performance. You can teach others, not because you seek admiration, but because you understand that mastery allows you to articulate complex ideas simply. Yet you are humble enough to know that no two traders walk the same path. You share principles, not guarantees. You advise process, not predictions. You have realistic expectations. You no longer dream of turning a small account into millions overnight. You understand compounding, growth curves, and the power of consistency over time. You are content with modest but steady returns because you know they are sustainable. Risk as a business. At this level, risk is not something to fear, but something to price, manage, and control. You think in percentages, not dollars. You size positions based on volatility, correlation, and probability. You adjust exposure according to performance metrics and market conditions. You know your maximum allowable drawdown and protect it fiercely. You embrace the reality that trading is about surviving the bad times so you can thrive in the good ones. You accept boredom as a sign of discipline, not failure. You understand that excitement often leads to recklessness, and you seek consistency instead. Adaptability and growth. You remain flexible. You monitor your strategies for edge decay, adjusting as markets evolve. You backtest, forward test, and validate ideas rigorously. You understand that edge is not permanent and that adaptability is a key to longevity. You refine, not reinvent. You tweak parameters, not abandon principles. You invest in yourself continually. You read, learn, network, and stay informed. Not because you fear missing out, but because you respect the craft. You know that complacency is dangerous and that mastery requires ongoing effort. You think beyond charts and trades. You consider taxes, structures, business planning, and succession. You treat trading as a business with departments: research, execution, analysis, and management. You think like a CEO, not a gambler. Why few reach this stage? Most traders never get here because this stage requires sacrifice, patience, and humility. It demands that you abandon ego, accept discomfort, and commit to a process without the guarantee of success. It requires years, not months. It requires embracing boredom, enduring frustration, and mastering yourself more than mastering the market. The professional understands that consistency comes not from genius, but from discipline. Success is not about brilliance, but about execution. Edge is found not in secret indicators, but in superior behavior, rigorous process, and relentless focus. Final thought. At this stage, trading stops being a dream and becomes a craft. You no longer seek validation from profits alone. You find fulfillment in the process, in the discipline, and in the continual pursuit of excellence. Ask yourself honestly, have you stopped looking at trading as an escape and started treating it as a serious business? Have you embraced risk management as your true job? If the answer is yes, then you are no longer just a trader. You are a professional risk manager, and very few ever earn the right to say that. Which stage are you in right now? Understanding where you truly are on your trading journey is one of the most valuable realizations you can have. It protects you from unrealistic expectations and keeps you grounded in reality, not in fantasy. When you accurately identify your current stage, you gain several advantages. You stop comparing yourself to others who started long before you. You understand exactly what skills or knowledge you need to work on next. You avoid falling into the trap of overconfidence or self-delusion. You can build a clear and structured plan for your future development. Do not rush. Do not feel anxious. Trading is not a profession for those who seek quick rewards. It is a craft that demands patience, time, experience, and often a price paid in money, emotions, and countless hours of learning. But if you stay on the right path, if you persist through the ups and downs with discipline and humility, the results will come. If this mindset resonates with you, and you want to continue learning about trading psychology, discipline, and how to build a strong foundation in this challenging business, subscribe now to Trading Mindset Lab. This is where serious traders grow.